Hello investors. We would summarize third quarter FY24 corporate earnings performance as broadly in line, but two-faced in nature. A step forward for industrials, infrastructure, capital goods, and a step back for consumption-oriented stocks. While the beneficiaries of India CapEx theme reported resilient earnings, on the other hand, we saw broad-based weakness in consumption-oriented stocks, particularly the stocks that are exposed to lower income and rural segment of the economy. Going forward, based on consensus forecasts, Nifty 50 earnings growth is likely to be around 15 to 17% in FY25, which reflects the broad-based earnings resilience of India Inc. We anticipate that 2024 would be a year marked by transitions, primarily driven by three key expectations. First, with approximately 50% of the top 20 nations undergoing national elections in 2024, we foresee a shift in the macro debate from economics to politics. This is especially pertinent as two of the largest democracies, US and India, conduct the elections to choose their government for the next 5 years. Second, we expect global economies to transition from increasing inflation in 2023 to a phase of disinflation in 2024. Consequently, central banks are likely to engage in debates about the pace of interest rate adjustments as we progress through the year. Lastly, we project that global growth will reach its lowest point in 2024. In other words, we anticipate a slowdown in GDP growth, particularly in the first half of the year as we go through the year, followed by an eventual rebound in 2025. We perceive market valuations as generally fair, encompassing large cap valuations that are at par with 10-year average and mid and small cap valuations that are 30 to 40% higher than 10-year average. However, we do observe pockets of irrational exuberance amongst mid and small caps. Hence, we anticipate that exercising mindfulness regarding valuations and being selective in stock picking within these segments would be crucial for outperformance in 2024. Anticipating a period of noisy macro conditions characterized by slowing growth rates, especially in the first half of 2024, we believe that aligning portfolios with areas of earnings resilience is the way to go. In this context, we anticipate that earnings will demonstrate resilience in sectors such as industrials, power-related industries, NBFCs, and real estate. Lastly, we identify IT services sector as a dark horse of 2024, positioned as a strategic play on bottoming out of global growth throughout the year. Given the favorable valuations for large caps and the positive earnings momentum for mid and small caps, we consider maintaining a balanced portfolio across market capitalization to be a prudent strategy in the current market conditions. For investors with reasonable risk appetite, we recommend multi-cap portfolios, while for conservative investors, we would advise investing in flexi-cap funds, while for aggressive investors, we recommend the mid-cap funds. Thank you very much for listening in. Happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.